May, Bitcoin's just been rejected at $65,000. So let's get into the analysis for today on the short term, the medium term, the long term, the traditional markets, S&P, NASDAQ, the USD, the VIX, and also some international markets to get through before I get over to the altcoins. Some altcoins are leading the charge, potentially hitting new all-time highs. Some data here looking at the S&P 500 with a pretty decent hit rate of further upside. We've just seen the S&P close a second day above the 50% level. As we looked at yesterday, this was a pretty good sign. The stock markets, of course, potentially putting in that low back in April. Now, the view that we've maintained here is that this is a correction in the overall bull market. My theory here, since the lows back in 2022, we had the low in June, then the second low in October. My view is that we've been in a macro bull market for quite some time, and this is going to continue on for a lot longer. I don't see any sort of major collapse coming in 2024 or 2025 based on the data that we've presented here for the last umpteen months. So that's good stuff so far for the S&P if you are looking for higher prices. But of course, the overall health of the economy and the stock market more importantly here. This is part of the seasonal period for the S&P 500, for the stock markets, leading into that election later this year. The seasonality meaning that we've gone up to reach a top, we've got a correction, and now we're basically grinding sideways to test the supply, test the demand at the lows, and eventually get back to new all-time highs. So I'll get into Bitcoin in a moment, just looking at the potential of a new all-time high for Q2, or maybe even a red quarter, as I'll go through a little bit of the data there. But I just want to quickly run through this piece here. S&P 500, after survey stock allocations cycle from less than 45% to greater than 65%. So less than to then greater than. There's only 4 data points here. Goes back to the 90s. Every time this data point has come up, 3, 6, 9, 1, 2, 3 years, there's a 100% hit rate of higher prices for the S&P 500. Now, I'm not going to get too far ahead of ourselves. There's a lot that can happen here. There's only few data points. But the beauty about this, or what this is trying to express, is that once you cycle from deep pessimism to high optimism, it's usually not as bad as the masses think. And that's, you can see here, that's been some very deep pessimism, and then it cycled to optimism, and you had many years left in the bull market. Granted, it didn't go that much higher back in 2007, but it's still higher prices, and it's basically trying to hold in to that ride where everyone keeps saying there's a recession coming, there's downside, it's gone up too high, things are overbought. You hear that over and over and over again. It must collapse, it must collapse, it must collapse, and it just doesn't. And the point of a lot of this data is to show that bull markets can run a lot longer than many anticipate, especially after significant pullbacks. So you can see here for 2022, pretty significant pullback, and basically everyone was very, very fearful in 22 and 23. Some of them still are now, but it's a lot less now, according to the data, than what it was back then. And so many are still hoping for this correction, but it doesn't seem like it's going to come based on the data, based on cycles, because generally bull markets keep going and they go for a lot longer than people expect. And eventually the feeling of the bad times wears off, and that's when you need to start getting scared. The bad times haven't worn off yet, and the full-on good times haven't taken effect, at least from what I can see. And I think when those times happen, that's when you see a correction. Bitcoin was a perfect example of that. To the downside, we look at the smaller 50% move of this range now, the low to the high, that comes in at $61,000. So if this move was to fail here and go under 61, that would be invalidation of the move to the upside, and you could expect a test of lower prices. You probably end up testing somewhere between that sort of $56,000 and $59,000 level. But for now, just one day reversal. Got to see how this plays out. A break above 65, good for the bulls, bad for the bears, or breakdown from 61, good for the bears, bad for the bulls. So we wait now and see how this is going to react. The levels above are 67K, 69K, and $71,000. Stuff we looked at yesterday, so I don't need to repeat that. You can see pretty clearly how those trend lines have been formed. If you want to throw on some candles, pretty clear support and resistance through those particular levels, every roughly $2,000 to the upside. Now, the 50% level at 65K is a much more important level than the 62K was, because it makes up a longer time frame here. So you're looking at the weekly chart and a test now of 65K. The weekly chart's tops to the bottom here, slice through the middle at 50%, 65K. As we've looked at, if this is rejected, downside there to the 50% and the low is 56K. Next price down is around $49,000. Now we do have other targets in the zone here between 50 and 53. Let's not worry about that for now because there's still a bit of work that needs to be done here for the market to break down, for Bitcoin to break down from that if it breaks down. So at the moment, that's where we stand here for Bitcoin, the short term, medium term. Let's get across to the longer term here, looking at the left and right translated cycles, but more importantly, the quarterly chart. Now this quarter is not complete. It's red, but it's not complete yet. These are all the quarters we've had throughout this bull market. 2 greens, a red, 2 greens. Could it be a red? Let's wait and see. Now using this chart here, so the information that we've got from TIA indicators, this will be released, I'm hoping, in about 4 to 6 weeks. Subscribe to the free report and you will get an update when this is all released, along with our predictive cycles as well. I've taken out the bearish years, 22, 2018, 2014, and you can see for the April-June quarter, so basically quarter 2 of the year, there's only been 1 confirmed red quarter. Could we keep going green? Yes, it's possible. We've had 2 green quarters already. Now there's just over halfway to go in quarter 2 before we can get a confirmed result here if there's going to be red or green. Each bull market has seen at least 3 red quarters. So 2017 bull market, 3 red quarters, not overly convincing in terms of that the market had to collapse. Like they weren't really big red quarters when you look at open to close. There were significant corrections. This one here was 40% from the previous quarter to the bottom. But in terms of the loss in just that quarter, it was only 9.2%, going back 3%, and then only 10% here. So not big quarters. The only real big quarter was April, or quarter 2 of 21, which was a 40% correction. You can go back to 2011, they were obviously massive ones, but far less liquidity in the markets. Bitcoin was trading in single digits. I don't lean on that as much to expect a 70 or more % correction for the quarter, because as we've seen throughout the bull markets, there's usually at least 3 red quarters there. You can see in the previous cycle, and then this cycle there were 4, but one of them was the COVID correction. So if that didn't happen and you had a higher low, just the ifs in that, you still got 3 red quarters within this bull market. So is now the time? That's yet to be decided, but some of the data is lining up that it could be a red quarter. Let's continue on because the market would have to get above $71,300 to make this a green quarter by June 30. Bitcoin getting rejected. We looked at the possibility of a red quarter 2, or when that next all-time high could come through for BTC if that red quarter is in play. Altcoins that are leading the charge here. This is what we definitely want to see for our altcoin portfolios. And I'll see you back here tomorrow for another update. Thanks again, guys. Catch you then. Peace out.